Well, good morning, beautiful people. It is July 27th, 2026. It is so good to see you all this beautiful Monday morning here in our amazing city of Austin, Texas. So grateful to be living in Austin. We do have a beautiful city, don't we? I love our city. I love our skyline. So much to do in the city. Absolutely love it. Yo, it's going to be a very, very busy and important week this week. We've got a lot going on. Let me take a look at the economic calendar here really quick. We've got some bond auctions happening today. So far, we're down 2.5 basis points, a little bit better than yesterday, but a little bit worse than where we were this morning. This morning started off double that, and we're losing some of the momentum that we saw here earlier this morning. Durable goods order, that was down 4%. They were expecting it to go up. And we've got Dallas Fed manufacturing came in better. That's good news. We've got a few bond auctions happening between 10:30 a.m. and noon. Tomorrow, we've got the house price index. I love it when the house price index is released. That's going to give us an opportunity to update the Fannie Mae House Price Index, which compares Austin with the top 40 population centers in America. And we also compare it with all of the other cities that they report on. You can find that on Insight and Statistics. Go down to macroeconomic data. And here we've got the Freddie Mac House Price Index. This is one of my favorite reports that we update on a monthly basis. And this is going to be updated tomorrow. The data is released at 0800 hours. I will be just glued to it, and then I will update everything, update that webpage, and also email you the updated information. We'll discuss it Friday during our live team meeting. We also have consumer confidence. We've got more bond auctions going into Wednesday. Mortgage commodity data. Big one is going to be Wednesday afternoon, Fed rate decision. They're going to stay the same. So really the most important one is going to be the Fed press conference. What are they going to say? And then Thursday, we have a lot of information. We've got GDP, gross domestic product. We've got PCE, personal consumption expenditure. We've got inflation data, consumption data. Really big day on Thursday. And then going into Friday, we've got employment data along with Michigan consumer sentiment. This is from the University of Michigan. How is the consumer feeling right now? Big week next week. Job data coming out next week. Institute of Supply Chain Management. And then all about labor Friday, August 7th. So for the next 2 weeks, very important, very busy economic week that we are experiencing right now. Rates are elevated. When you take a look at Robert's rate sheet from this morning, we are still at the 6.875. So very much an elevated rate environment that we are experiencing right now. And that is going to be your economic update for the Monday. So super important week. Lock and float is going to continue to be my recommendation for any client. It's been my recommendation now going on 3, 4, 5 years, a lock and float. I have no idea what these numbers are going to come in at. We have no idea what the Fed is going to say during their press conference. They could very well say we've got concerns with elevated inflation risk and we might even go up on our overnight lending rate. And if that were to happen, the bond market would just be terrible and rates would go up. And they might say the opposite. We don't know. Locking in right now, floating in case we've got good news, capturing that bottoming out of the bond market would be my recommendation. If we've got terrible news, well, then the client is locked in. Let's see what is happening with real estate here in our area. Because of this elevated rate environment, you can see that we broke the trend with a new listing to pending ratio. We now have 4 weeks in a row prior to us updating this week that we're about to do this past week. We've got 4 weeks in a row where the new listing to pending ratio is now underperforming last year, meaning the same week last year we had a better new listing to pending ratio. Keep in mind, this is a leading market indicator, the best leading market indicator. My two favorite ones, it's going to be the new listing to pending ratio and then the activity index. We're going to look at those two very closely. We're going to look at the entire Austin Daily Real Estate Briefing, do a complete market overview here for the Austin market. Let's take a look at the number of new listings so far. Keep in mind that this information is from the 20th all the way through the 27th. You know what? Before we do that, we're going to update the pendings from the 13th to the 20th. First, active under contract and then pending. And we always look at the 6-county area: Travis, Hayes, Williamson, Bastrop, Burnett, Caldwell counties. 1, 2, 3, 4, 5, 6. Active under contract stays at 588. Pending goes up to 397. Let's take a look at the pending from the 6th to the 13th. That's going to be 423. Let's go from the 29th to the 6th. This is going to be 483. Let's go from the 2nd to the 29th. We're at 497, 15, 22nd, 542. Everything else stays the same. We can now update the number of new listings from the 20th to the 27th. This information will be updated tomorrow morning. You will receive an email with the most up-to-date new listing to pending ratio because new listings, price increase, price drop back on the market locks in. When the clock switches from 11:59 p.m. tonight to midnight, that information is locked. So when we capture this update tomorrow morning, that number will never change. Active under contract and pending will continue to go up, more so on the pending side because agents are really bad, especially builders, when it comes to updating that pending. On the active under contract or on the new listing side of it, we are at 942. Okay. 942. Last week, we're at 1,065. When I click on the next tab, we're going to see the year-over-year comparison here shortly. 244. Price increase, higher than the previous week, 216. Price decrease, we're at 1820, lower. 1820, 88%. Better than that 90%, back on the market. 220, back on the market. Little bit higher, 23% back on the market. Interesting. 23% back on the market. That's a high number. Historically, the higher the back on the market, the better the market. But there is a variable right now, a big but, which is the interest rate. So I've spoken with a number of team price agents and they're starting to use the word like cold feet, the word like, rates a little bit higher than when I got pre-approved a month and a half ago. That is why when you are working with a buyer and the buyer is rate sensitive, you've got to have this conversation up front really early on. When you get that offer on your listing, give that lender a call and ask the question, hey, when did they look at that pre-approval letter? If I get an offer today on my listing, it's July 27th, and that pre-approval letter is from June 15th, I'm calling the lender up. And I'm saying, hey, did you run their information again? Do they qualify for this? I don't want a property to come back on the market 20 days into the contract, one day before third-party financing expires, because as a listing agent, I didn't do that due diligence. Active under contract. Ooh. Oh, I need to stretch. I need some coffee. 3, 6, 8. 5 guesses. You know the drill. I need 5 guesses. 5 brave team price souls to guess how many pending. Who is going to lead us? Who is going to initiate this? Melanie Price coming in at 215 to 135. Ryan is like, there is blood on the street, 135. Daniel at 210. Bertina coming in at a slightly bullish 225. Charmaine at 201. Violet and Sonia coming in the 180s. 188 Violet, 181 Sonia. Let's take a look at this. Let me click on it, move my screen. Click on it. We are looking at, here's the good news. It's not as bad as what Ryan guessed, but it's also not that far from it. We are at 176. Oh. Yeah, Sonia said, ouch. I'm right there with you, Sonia. It's like, gee. Like, I bet you when you put in 181, you were like, yeah, I'm just going to go way low. Okay, 176. There's the data right there. Let's compare the year over year. Good news. 2 weeks ago, 12.8% less new listings entered the market compared to the same week last year. So far today, 9.7%. That's going to be negative. We're not going to get 101 new listings in the next 13 hours and 42 minutes. That's not going to happen. We'll get 50. We'll get 50 new listings. So this number is going to go up from 942 to the upper nines, 990. Let's say this is 990. Ends the day at 990. We're looking at a 5.1% drop. So right now we're at 942. 67 more price increase, which is really crazy. 671 less price drops. Good number. 6 more back on the market. It's a high number. And look at the pendings. 2 weeks ago, down 176. That's from 2 weeks ago. 3 weeks ago, down 49 on properties going under contract. 3 weeks ago, up 15, but we were up 107 on new listings. So we're down 4.8% on the new listing to pending ratio. Crazy. We're down 2.1% 2 weeks ago. There's no way I don't see us we'll get another 50 or so properties under contract. 50 or so reported properties under contract, which means we could very well go positive right here because we had 156 less new listings. Let me go here and let's just say we add another 50. We go from 397 over to 450. Then we go green. Do we have to even go over to 450? I think we're going to hit around 450. Well, this is 423 though. Might not be an entire 450. Let's just say we go to 430. Do we go green? We go green. If we go 430. So if we just get another 33 properties going pending 2 weeks ago, we'll then go green. That's going to happen. We're at 0.77, 0.79. The reason that's going to happen is because we had 156 less new listings enter the market 2 weeks ago, which means this is going to go green. We're only down by 2.1%. It's going to go green. That's good news. 0.77, 0.79. And when we were updating this data last week, we were very encouraged with the active under contract and pending. This week, though, we're at 0.47. Huge uptick last year. This same week last year, 0.89. No way we're going to reach that. It ain't going to happen. As a matter of fact, we are going to be negative double digit. Our largest negative was 3 weeks ago at 6.5%. The gap is just so much. Now we're going to be negative double digit. We're going to be a good 12 to 14% negative on that new listing to pending ratio. Sonia said, I'm feeling it. So there you have it, you all. There you have it. Let's go ahead and update the pending for June of last year. See if we have to update anything. We are looking at pending. Entire June 1963, that doesn't change. Let's take a look at new listings. This is going to be month to date. Wow, 3775. 3775. Last year, 4465. Could we beat last year? 700 listings. It is the 27th. We don't have that much time. I don't think we're going to beat last year. We're looking at price increase, 1143. Huge improvement compared to last year's 710. Price decrease, over 5,000, 6880. Way better than last year. Last year, 9133, 93%. This year, 6880, 86%. Let's take a look at back on the market. We're looking at 723 back on the market, 19%, an improvement compared to last year. 1638 active under contract and pending. Oh my goodness, y'all. We're 27 days into the month and we're at 1149. 1149 pending. So we've had 2,783 properties go under contract so far this month. We had 4,040 go under contract July of last year. We know that agents are really bad when it comes to updating pending, but this is a pretty big gap. And the gap on the new listing entering the market, it's not huge. So we've got the 27th, 28th, 29th. How many days this month? Is it 30 days this month? Let me take a look at the calendar. 31. It's 31 days this month. So we can get that extra day. So we've got 4 full days. And let me take a look at something really quick. I'm going to go from the 28th to the 31st of 2025. And we had 599 properties come on the market on the last 4 days of last year. If I add the 27th to that, we've got 631. So if I add 631-ish to this, we're going to get really close. Let me go ahead and do that. So let's go to the monthly, new, and I'm going to go equals plus, let me go 620. 4344. Yeah, we're going to get really close. We're at 37. Doesn't look like we're going to beat it, though. Does not look like we're going to beat it. The reason why is because of that week right there. That week, we just had a 12.8% drop on the number of new listings. So that was that big pullback that we noticed 2 weeks ago on the number of new listings entering the market. Withdrawn, let's take a look at withdrawn really quick. I have to re-input Travis, Williamson, Caldwell, Bastrop, Hayes, Burnett counties. So far, month to date. Withdrawn, we're looking at 825. And then expireds, we're looking at 257. 257 expireds. Those are in line. I'm not worried about those numbers. We go ahead and save it. Bottom line, a noticeable change in momentum that we've been experiencing going all the way back to February. This should not be a surprise to anyone at Team Price. If you've been joining this meeting starting back in June, going into July, I took more of a cautiously optimistic approach. I said, hey, the momentum is slowing down. And we're now, as of now, 5 weeks in a row where we are underperforming the new listing to pending ratio compared to last year. Thankfully, from July 13th through July 20th, we are going to go green right here. We're going to go positive. So the market is just trying to maintain that momentum, but rates have not been friendly for the market. And that is a reality. That is something that we're absolutely noticing. And it is affecting the resale market more so than it's affecting the new construction market, because builders can just throw all kinds of incentives just to keep that walk-through traffic nice and healthy. Let's go ahead and close this. This will be sent to you today as a PDF along with a summary of this meeting. And let's take a look at the Austin Daily Real Estate Briefing. And right there, what do you notice, you all? What do you notice right there? Anything? What do you notice? If you've been paying attention. There we go. That's exactly it. We've been negative on the number of active listings for quite a while, but we were negative 10%. Now we're negative only 0.61%. So the number of active listings year over year went from, this year we are just negative 11%. We had 11%, 10% more active listings this same day last year compared to today. That number shrunk down to 0.61%, really closing that gap. On the pending side, we were positive at the highest 11.4% when, like a month ago. And now we're negative 1.08%, meaning the snapshot from today on the number of pending properties compared to this same exact day, this same exact Monday within the day of the week last year, we're now down 1.08%. And that's the raw number of pending properties. I wake up in the morning, I just drink my coffee, I do my routine, and then, okay, how many pendings do we have? How many actives do we have? And I just love taking that snapshot, that accurate, same time, year over year snapshot. Let's take a look at the number of active listings. We can see that we're currently at 17,800. We're down by only 346 compared to the peak of last year, which was June 30th. This number continues to go up. We're at 55.3% of all the active listings have had at least one price drop. There's the active listing count. We're down by only 0.61%. Out of the 17,800 active listings, 4,370 are new construction, 13,430 are resale. Now, to put this in perspective, you all, at the absolute bottom of the market, back in 2022, the entire MLS had like 2,000 active across the board, all new construction, all resale, like 2,000 active, total active. So on the new construction, we have more than double, just on the new construction, more than double the number of all listings across all categories, across all cities or all counties, all zip codes. It's really amazing. We're down 3.9% on the cumulative number of new listings from January all the way through July. On the pending side of it, we went negative. Not only did we go negative year over year, but we also went negative compared to 2 years ago. So we now have less properties pending. We're at 4,380 right now. This same day last year at 4,428. So we're down 2025, down 2024. When you add all of the pending properties, every single property that went pending so far from January to July, we are up 2.2% year over year. And we are 9.1% above average. So the good news is when you look at everything that went pending, we are up. And we are actually, this is the best we've been since 2023. Best we've been since 2023. What about the activity index? Activity index is down. We're at 19.7%. This same day last year, 19.8%. So we're down 0.4% on the activity index. So we are now trailing last year on that pending divided by active plus pending. also a leading market indicator. Look at the activity index on the resale side of things. New construction, not bad, 27.34, puts us in that balanced market phase. Resale, 16.92% activity index. That is no bueno. That is low. Melanie said this is the time of the year when the market slows significantly historically, so I am not surprised. You're absolutely right. When you look at cities, we have Cedar Park leading at 24.93. Violet said, do you think the difference between now and last year this time is interest rate? Absolutely. Yeah, you've got a war going on. You've got a lot of uncertainty. The market doesn't like uncertainty. The market doesn't like, it's like, okay, stop, go, like, ceasefire, non-ceasefire. The market hates that. The market can deal with bad news. The market would rather have good news. But what the market dislikes more than anything is uncertainty. And that is what the market has encountered. So the market is going to react to uncertainty by having higher yields. And of course, higher yields always will mean that a certain number of buyers, especially the rate sensitive buyers, more so on the resale route, because builders can counter that higher yield by increasing their incentive. On the resale side of things, they're just going to put a pause. They're going to say, you know what? Not yet. I just want more clarity as to what's going on. There's a big part of it. When you look at, let's look at a few more things. How fresh is the market? When you look at the entire MLS, out of all 17,800 listings, 22.7% didn't exist. Cedar Park, 34.8% of the active listings on the market did not exist 30 days ago. So that's a very fresh market. That's a huge number. That's a massive number. So our hope is that this inventory will continue to get absorbed. The activity index, though, in Cedar Park down to 25.2%. That's a little bit on the cusp there. So we got to really track Cedar Park carefully, because so many new listings are entering the market that at a 25.2% activity index, the number of active listings can really start piling up. Let's look at a few more things. Months of inventory. There's that little bit of an uptick right there. We are down 5.3% months of inventory. Be very cautious with months of inventory. I've been saying this. I'm going to keep on saying this. This is going to be the most deceptive. The two most deceptive figures in real estate. Between July and October in the city of Austin, in our market, we have a very, very early selling season in Austin. It's going to be pricing and months of inventory. You've got to be obsessed with the activity index, less so with the months of inventory. We look at it, we analyze it, we study it, but this is going to give you the picture of what happened in the past 90 days, not what's happening right now and what may happen in the next 90 days. That's where you rely on the activity index. But so far, months of inventory, we're looking at 16 cities that are down year over year, 14 cities that are up in inventory year over year. Over the past 2 years, we've got 21 or higher, and we've got 9 that are lower. This list is switching. This list is compressing. What do you think will happen inventory-wise in 2027? I'll say this, Melanie. There is and I promise you this, you can mark my words and you can hold me to it. I promise you that there's a 50-50 chance that it might go up or down in the next 12 to 18 months. I promise you. Just write this down and mark my words. So that's my forecast, and I'm gonna hold to that forecast. When I look at all the leading, lagging indicators, interest rates, geopolitical movements, I just have to say, there's a 50-50 chance it might go up or down in the next 12 to 18 months. I guarantee you. So you can write that down and you can quote me. I'm that confident in that promise. I need a date and a forecast of 90%. I gave you 100% confidence. I gave you the date. I gave you 100% confidence. So I exceeded your expectations. I will say that much. You are welcome. You are very welcome. We're expecting solds to be somewhat flat year over year. We're not expecting a big bump in solds. We are up 6.2% year over year on the cumulative sold properties that we've seen. When you adjust it for the number of realtors, this is the encouraging part for us, you all. We're up 11.8% on every sold property adjusted for the number of realtors in the area. Pricing, we're starting to see that pullback in pricing. The average sold price now is only up by $1,317 month over month, only up by 0.2% month over month. There's that pullback. There's that reversal on the sold price. Activity goes down. Interest rate goes up. Activity index starts collapsing under the 18% on the resale. What follows? Price collapse follows. I hate to use the word collapse. Price adjustment. Price improvement. I hate those emails. Price improvement on this listing. It's just like, no, it's still overpriced. Every time I see an email that says price improvement on the title of the email, I just want to do like an auto response that anytime the word price improvement is on the title of the email, it just auto responds with still overpriced. As a matter of fact, I'm going to do that. I am going to do that today. So I'm just going to immediately, still overpriced. The second they say hit send, it hits my inbox, auto responds, still overpriced. Keep going. It's going to say that, still overpriced, keep going. Then a really cool GIF of like someone like running or something really cool to encourage the other agent to kind of keep going. Maybe a music playing in the background. I'm going to do that because I want to encourage people. So you got the average sold price up 0.2%, but take a look at the median sold price. We are now negative. We are negative 0.6%. We still have quite a few properties left to be reported on the sold side of things. We know that cheaper homes close towards the end of the month. We all know that. People that are more closing cost sensitive want to close as late into the month as possible. That's what happens historically. It'll always happen. And we can expect the median sold price to continue to go down. Is it going to go down to the 430s? No, it won't. Low 430s. It's not going to go negative year over year. I personally don't see it go negative year over year. I don't see the average sold price going negative year over year. I don't see the median sold price going negative year over year. We've got really good sold to list price ratio at 97.43 compared to 97.15 last July. So it's going to be positive on the year over year. It'll be negative both on the average. It already is negative on the median month over month. So there's that pullback of the market. Selling season is over, has been over. Market in the Austin area peaks towards the second or third week of May. We all know that if you've been faithfully watching this Monday Morning Touch Point, you know all that. So I can attribute a huge part of this with the seasonality of real estate. And yet we have to take into account what's happening now that differs from last year. And that is geopolitical conflict going on right now. Higher oil prices, uncertainty within the market, and then with that, the, overall uncertainty within the market, and just higher bond yields. That's what we have to take into account. The other thing that's happening in the month of November, we are 100 days out. We are 100 days out from midterms. And we all know that midterms do tend to slow down the market because it goes back to uncertainty. So as we approach midterms, you can go back historically, you can see a pullback within the market. Midterms happen, half the people are upset. The other half is happy, but then uncertainty is gone. Now people are that uncertainty is eliminated And now you bring back a certain degree of stability because uncertainty has been somewhat eliminated. When you look at the median sold price, we're at $442,195. We are down 19.6%. So if today is the absolute bottom of the market needs to appreciate 24.4% in order to go back to its median price of $550. And that's only going to take 59 months, May 2031, right around the corner. We're going to blink and we're going to be there. Now, what about all properties that have closed so far this year? 18,404 properties have closed so far this year. We're up on the average sold price, 0.5%. We are down 1.5% on the median sold price. That's if we look at every single property that has closed so far this year. We are up on the sold to list price ratio. We are outperforming last year. We're outperforming 2023. So we're at 97.3%, which is not a bad figure. That's a really good, healthy figure. When you look at the bottom 25th percentile compared to the top 25th percentile, bottom 25th percentile is down 1.2%. Top 25th percentile doing very well, up 7.6%. 7 cities have gone up in price. When you look at the median sold price for every single property that closed so far this year, 7 cities are up in value and 23 cities are down in value. Let's take a look at the worst ones and the best ones. We've got Wimberley killing it. Wimberley is just doing great. Wimberley is the number one city. Number one, up year over year, 16.8%. Down 2% from the peak month, right? What is happening in Wimberley? Limited inventory, that's what it is. Limited inventory in some really expensive homes, very expensive homes. What about the worst so far? We've got a -12. That's going to be Marble Falls. That's going to be your worst one. Marble Falls, -12. Marble Falls down 37.5%. It's going to take 110 months to return to peak based on its historical appreciation. Manor down 17. Manchac 22. What about Buda? Buda down 24.1%. Crazy. 91 months to return to peak, Buda. 91 months to return to peak. That's incredible. Gerald, 127 months to return to peak. That's going to be the one that's going to take the longest to return to peak. Gerald, down 4.7% year over year, down 22.8% from the market peak. Really just fascinating. How many buyers are there and how many sellers are there? Why is Buda down by so much? Competition, new construction competition. Builders are able to adjust the price super fast. And you've got a huge increase in inventory from builders that are offering crazy low rates. So that's going to put a ton of pressure on the resale. And I can speak from experience. I sold a property in Sunfield and it sold for, $170,000 less than what the buyers bought the property for back in end of 2022. So they purchased it December 2022 and ended up taking just a pretty substantial decrease on that property. I mean, when it was all said and done, it was almost a third. That's what it was, just about a third. So a lot of inventory, new construction, when you're competing with the builders, and the builders can offer incentives. They can offer that 3.99, that 2-1 buy down with the end rate going 5.99. They're going to be able to capture that business. That's going to be the main reason why. We're looking at 2.5 sellers per buyer in the entire area. 0 city hot, but on the zip code side of things, we're looking at 4 hot zip codes. 25 warm zip codes. What are the hot zip codes? We're looking at 28 is hot. 31 is hot. 39 is hot. 49 is hot. Those are going to be your 4 hot zip codes. 28, 31, 39, and 49. We're looking at 29 warm zip codes, 35 balanced. 47% of the market is balanced. The overall market is balanced, but when you isolate it to a zip code, 47% is balanced, 8 are cool, and 1 is cold. And which one is the one cold? That's going to be Dale. Dale's going to be cold at 13.7 sellers per buyer. A lot of leverage that those buyers have. The absorption rate, sold divided by active, we are still reporting on sold, so this number is going to go up. Not concerned about this number at 12.8 because it is the 27th of the month. That's when we start reporting these figures. Our desire is that this 12.8 will actually outperform the 16.4 that happened last year. And to Melanie's point, Melanie earlier said, let me go find her chat. Melanie said, let's go find it. This is the time of the year when the market slows significantly historically, so I'm not pleased. And there you have it. Right? So you go into June, July, August, September, and look at that. Everything changes. Melanie is absolutely right. We've got an early selling season here in the area, in our area, and then we have a big shift that happens between June and July. A really big shift that happens. Then we ride this out. We get that December bump. December is a really good month for our area. So as a broker, as an agent, what's my recommendation? Keep on stacking that pipeline. You know, even that person that says, I'm just going to wait, stay in touch, send them substantial value because things can change really fast. We start seeing an increase in withdrawals, increased in expired listings. Inventory does tighten when you look at the number of active listings. And then all of a sudden buyers come out of the hiding around October, November timeframe, and they close on a pretty good deal towards the December timeframe, and they're going to call who's been in contact with them. The market flow score, this is going to be your 0 to 10. 0 meaning you're going to starve to death. 10 meaning you are going to eat steak and lobster for breakfast, lunch, and dinner. And we're at a 3.03 right now. It is the 27th, and this number will absolutely go up. There are a lot of things that go into this number. The active to sold ratio, demand, how fast properties are moving, days on the market, market efficiency, what's the turnover score. Everything goes into this 0 to 10 number. I am not concerned that it's 3.03 right now, but what we need this to do is we need this to outperform July of last year, which went down to 4.56. We've had a really good run on this from February all the way to June, which puts us in that market recovery. We are still in a market recovery. So I want to reemphasize that because we're getting some bad news on the new listing to pending ratio. We're getting some bad news on the activity index. A lot of this is driven by forces beyond our control. It's going to settle down and then people are going to come back. If you look at the meeting notes from Friday, the long term, I even say the 2 to 5 year outlook for the Austin economy is exceptional, is absolutely amazing. I'll even share one more thing with you because permitting data was released, and this is going to shock you. So we are already building the next, or lack of building, but we're laying the foundation to the next inventory, the market having less inventory and us being short on inventory. We are building that foundation. right now. This is every permit that's ever been issued January to June. That's the first 6 months of the year. This is everything. This is 1 to 4. This is one unit. Then this is 2 to 4 and 5 plus. Y'all, so far this year, we've issued 9,812 permits first 6 months of the year. It's the lowest number since 2011. It's crazy. Down 75% from the peak. How many years does it generally take to get into supply shortage? 2 to 3 years. 2 to 3 years. Right? You know, the best time ever to be in real estate was 2013. That's the most closed per 1,000 agents was 2013. Why was that such a good time? Well, because the market was in full-blown expansion mode. Why is that? Because the number of permits crashed down to such a low that we now had limited inventory. Now, let me adjust this for population, because we've got more people living in the Austin area compared to 2010. And when you adjust it for population, year over year, we're down 30.5% on all permits. You think about all these apartment complexes, and it's like, we built so many apartment complexes. You're absolutely right. We did build a lot of apartment complexes. But where are we now? Like, how about like a 93% collapse? That's a collapse. We're down 93% on the number of permits issued for multifamily when you use population as an equalizer. We're laying the foundation for a supply shortage 2-3 years from now. That's a guarantee. That is an absolute guarantee. When I saw this number, I could not believe it. 2010 is so low that it cut the number off. Yeah, it did. It's like 23. It's like 23. Insane. So we're at 50. I mean, we're down 73% in 1 year. We went from 590 to 50, 590 2021. When I don't adjust it for population, we've got outside of 2010, in 2003 and 4, this is the third worst year on record for multifamily permits. It's shocking. Absolutely shocking. And take a look at permits issued in the month of June, 2.5. 2.5 permits per 100,000 people. Insane. I mean, we're down 87% year over year for the historical normal. 93.3%, that below average. Year over year, we're down 87.5. Based on the historical average, we're down 93. Based on the high of 2017 and 2018, or 2022 actually, we're down 98%. I mean, these are catastrophic numbers, which means we're going to have a supply shortage. Not today. When you look at apartments.com, and you look at Austin, Texas, we still have 35,000 available. So it's going to take time for that just to get absorbed. But some of these prices are just insane. 1 month free specials. I mean, look at this Beckett Wells branch. You've got specials. You've got $1,100 for a 1-bedroom, which is great. Probably giving you 1 or 2 months free, which is fantastic. So there's still inventory. I mean, look at that. That's a really cool swimming pool. Man, that's beautiful. Look at that. I'd live there all day long. What is that? Is that like a nice view or something? That's a beautiful view. Look at that. This is gorgeous. Oh, man. I'm going to show this to Gail. There you go. This is beautiful. And you've got studio to 2-bedroom. Look at the price. So this is now considered an affordable city. Rent has never been so affordable. That's going to draw employers in. Employers are already being drawn in because of what's happening with rental values. And we're not building anything new. We're not building anything new. Those are being completed. Permits that were issued a year ago are being completed right now, but we're not building anything new. So the foundation is already laid for a absolute complete market recovery. We are at the beginning phase of that market recovery. Are we going to see prices go down under the lowest that we've seen, which was January of this year, $400,000? I just don't see it happening. I don't see it happening. I don't see January 2027 being 390. I just don't see it happen. So that's the exciting part because we already crossed. Look at that. This was the low right there where the nominal price was actually lower than the inflation adjusted price. We did have a little bit of a bump right there, which had just created a gap, caused the market to be slightly overpriced in nominal terms as opposed to inflation adjusted. And now we're getting a little bit of that pullback again. This is just a cyclical nature of the market. The market was overpriced, adjusted for inflation by 51%. And then it got to the point where the nominal price was actually lower than the inflation adjusted price. That is called a bottoming out of the market. And then we go into recovery. That's why, because of this chart, January, I said, this is why I'm bullish for the Austin market. This is why we're in recovery. Before any headline said that we were in a recovery, we started calling it a recovery because of this. That's all I care about is just these fundamentals of pricing. And what are we noticing right now, July? Awesome, or the Awesome Business Journal. It's like, oh, wow, Austin making a comeback. Austin in recovery. It's like, well, of course, it's all about fundamentals. People can now afford it. That's what it is. So I'm still bullish for the Austin market. We do have a question. Which tab is that chart? This is the market cycle. Market cycle tab. You go to Insight and Statistics. You go to price data. Is it price data? Maybe it's, where is it? It's, market appreciation. Market appreciation makes more sense, of course. And then you can open that bad boy and you can find that chart. And that's going to be on, let's see where it is. I wish there was a way for me to actually see all the pages. That's going to be on page 31. Only page 31. Super easy to find. Page 31. Beautiful people. I thought so. That was one of my favorite tabs the past 3 years. Absolutely. Same here. Same here. All right, beautiful people. Thank you so very much for joining. Super, super appreciate it. Do not forget that we do have our training on Wednesday. We are going to continue to focus on brokerment. Take a look at the video that I sent you all this morning.